You're probably starting to look into trading indices like US30, NAS100, or the S&P 500. And can I be real with you for 1 minute? When I stopped trading Forex pairs and switched to indices, everything changed. I noticed that indices followed the technical aspect of trading a lot more. And me as a trader, I tend to focus more on the technicals than the fundamentals. I'm going to show you guys a beginner step-by-step guide on how to start trading indices so you can start trading them tomorrow. But before we start, if you guys haven't already liked that button, hit that like button for me. Subscribe to my channel. I have a ton of other videos that you guys may like. And if you want to work more closely with me, check out the links in my description. I do offer one-on-one mentorship and I do live trading sessions with my students every day. Now, without further ado, let's make some money. So this is going to be an introduction to trading indices. I'm not going to take too much of your time. I would just appreciate if you guys could stay for the whole entire video. There may be a couple of things that you think you know, but I may go into some things that you do not know. So the first thing, this is just some basic 101 knowledge. Indices are better known as indexes. And I trade US indices, which I'm going to go over in just a second. But you guys need to understand something. With indices, they are much more volatile than Forex pairs. The pip count is different. There's a lot of differences within trading indices compared to Forex pairs. The lot size is different. Guys, there's a lot of different stuff that I'm going to help you guys understand in this video. Now, the top 3 indices are going to be US30, which is the Dow Jones. Secondly is NAS100, which is the NASDAQ. And then thirdly is the S&P 500 or SPX500. US30 is the most volatile. Second most volatile is going to be NAS100. And third most volatile is going to be the S&P 500. They move the most during the New York session. So if you're asking me right now, Colt, when should I trade indices? During the New York session. This is a major hack though. The best time to trade indices is at 6:30 a.m. PST or 9:30 a.m. EST. Why? Because at 9:30 a.m. EST, that is when the market opens up for the US economy. So when you're trading pairs like Euro USD, USD JPY, you need to understand that those pairs are USD based pairs. So those pairs, as well as indexes like US30, NAS100, and the S&P 500, they're going to be moving the most when the American economy is open. So Americans are up at 6:30 a.m., 9:30 a.m. in New York. This is when the money's fluctuating, the banks are open, the monetary system is moving, everything's going. So you guys need to keep that into consideration versus if you're trading pairs like GBP, JPY, you want to be trading when those countries, Europe and other countries like that, when their economy is moving and the people are awake. So that's why GBP, JPY, Euro, GBP pairs like that you would normally trade, they trade the best during the London session. Keep that in mind. Now what I want to do is I want to go to my chart. I want to help you guys set up your watch list and help you understand a lot more information on indices. We are on my TradingView. If you guys don't already have an account with TradingView, definitely sign up. What I want you guys to do now is go to watch list right here and you're going to add all 3 of those pairs. Okay, so we're going to go right here and we're going to type in US30 and you want to get US30 Owanda. Right here, you can see I already added that to my chart. After you do that, type in NAS100, add NAS100 Owanda, and then the last one is going to be S&P 500. S&P 500 Owanda. Once you do that, you'll be able to switch from each index on your chart right here, and you can see. So my main focus has been on the S&P 500 because I like it. It's less volatile than NAS100 and US30. So the S&P 500 has been my go-to. One thing that I really want to tell you guys is with indexes, the main trend that they are in most all the time is an uptrend. I read bullish markets much better than bearish markets. So it works in my favor. So a lot of the time, if you guys really want to know what you should be looking for, very simple. You want to be looking for price to make higher highs, then to make higher lows, and this is where you're going to be getting your entries. And then you want to see price make new higher highs. This is going to be major when you are trading indices like NAS100, US30, and the S&P500. One thing that I am doing too when I show up, let me delete these for us, clear up the chart, is when I show up, I'm at my computer 5 to 10 minutes before the market open. I want to be able to do a quick analysis and breakdown and see exactly what the markets are doing, because some days they might be dropping, some days they might be going up. So you kind of need to be aware of what trend that we're in. So you're probably asking, Colt, how do I do this? Your best friend when trading indices is going to be the daily time frame. You can look at the previous daily candles for the past week, the past month. Usually what I'm doing is I'm looking at the previous daily candle. So our previous daily candle did close as a bearish shooting star. For all the people that did watch my previous video to this one about candlesticks, this candle right here is a bearish shooting star. So potentially if we grab our fibs from this low to this high, we could see price come down to these levels right here: 0.62, 0.705, 0.79. At those levels, we could be looking for a rejection, some type of reversal candle to tell us price is going to go back up. Now that's just the start. After I go to the daily time frame, I'm going to lower time frames like the hour, and realistically what you need to be doing is looking at all these time frames and seeing if there's any confluences, any similarities to the previous time frame. So the times that you would be pretty much looking at if you're trading the market open would be right around here at this candle, the 8 a.m. to 9 a.m. candle. And I do have my time set so I'm in alignment with New York, because I live in beautiful California, if you guys see that beautiful view behind me, but I'm in alignment with the market makers in New York. So I have UTC5 New York, okay? So what I'm doing is I'm looking at all these time frames and I'm seeing how these candles are closing. Do I see anything that's giving me confirmation that the market could be going up or could be going down? Going to the 30-minute time frame and the 15. Now what I'm going to do is I'm going to start going to the market open. So this right here, this candle, look at the bottom right here as I hover over this candle. This candle opens at 9:15, closes at 9:30. So you want to be looking at 3 main time frames right before 9:30. You want to be looking at the minute 30, the 9 a.m. to 9:30 a.m. candle. You want to be looking at the minute 15, the 9:15 to 9:30. And the minute 5, you want to be looking at the 9:25 to 9:30 candle. So if you're really big into technicals, you could be like, do you know what? Well, looks like price had a little support over here. It potentially could be bouncing off that support and it could be closing as a bullish candle. Maybe this is a good buying opportunity. Maybe you're like me and you're like, do you know what? I need a couple more confluences to tell me that this is going to be a good buy, because it is kind of going down. So you could play and wait a couple candles. Okay. And maybe you see this spinning top. It broke above the EMA, signaling that we're in an uptrend. You're like, do you know what? There's my candle right there. I'm going to take a long position, have my stops right below here. And then for my take profit, I'm going to just aim for these previous highs right over here. So you could be trading at the market open right after the candle closes, but you guys need to understand something. There is something called a false breakout, where the market will go in the opposite direction that it actually intends to go into. And let me give you guys an example. Doesn't happen every day, but it happens frequently. So look, this is a very good depiction of a false breakout. You guys can see right here, this candle, look at the wick. It comes down and traps a bunch of people to sell. And then the market pushes up, comes down one more time to retest this support over here. And then what does it do? It pushes up. So you kind of need to make sure that one thing that I'm usually doing when I am trading, if we go back to our trade over here, is I was on the daily time frame a second ago, and I saw my previous daily candle was bullish. So automatically higher time frames are going to be the most accurate. So if I'm looking at the previous daily candle and it's bullish, the trend is my friend, it's most likely going to keep going up. So what I can do is when I'm on these lower time frames is find a candle or some type of setup that is in confluence with my bias for the day. Bullish. So now I have this spinning top rejecting our 66 EMA. Let's see how this plays out. Go a little bit quicker. It's important that we have our stop not right below here, but a little bit lower. You can even have it at the low of the session right here. So let's see what happens. And eventually TP gets hit right on this candle. Now I'm going to give you guys a major trading hack. When I'm going into a trade, ideally, this was my trade setup. Before price starts playing out, what I'm doing is I'm getting my Fibonacci's. And it does not matter how you have your fib set up. I'm going to give you my settings right now. But what I'm doing is I'm going to my entry, wherever I'm entering, and I'm dragging it to the top of my TP. And then what I'm doing is I'm finding the 50% level. So I'll just get my trend line right here. 50% level is right here. I'm going to mark this up, make sure it's even because the trend line can be uneven. Then I'm going to delete my fibs. But before I do that, here are my fib settings if you guys want to take a screenshot right now. And then also take a screenshot right now. Once you do that, your fibs should look identical to mine. They won't have those little fugazi, colorful Fibonacci's that look like a child made them. And then once we have that 50% level, we can delete the fibs. And I like to go right here, grab my tool, and type in take off 50% trail stops to entry. So we can see once price goes and hits this point, I'm going to close 50% of my position, and I'm also going to trail my stops to my entry. So let's go and watch what price does, and we'll see when it hits that 50% point. And also, I always talk about this, guys, add alerts. Go right here and create an alert for your TP, halfway point, and your stop loss. Got close to our halfway point. There it is. So if we drag this into the future, and then we drag this as well, boom, 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 we can see once price hit that 50% level, we're closing half of our position, we're trailing our stop loss to our entry, and we're letting the rest ride out. And you're probably like, well, Colt, I would have got stopped out right here. That's fine. At least you locked in some profit and you were profitable on this trade. That's all that matters. This is something that I have been doing, but my trading entries are very optimal. So when it does do these retraces like this, my entry on my trades are all the way down here. So when it does retrace, it's just going back into minor profit. So that's what I wanted to show you guys in this video. Here's an introduction to indices. Actually, there's one more thing that I would recommend that you guys do before I end this video. What I would do is go on the 15-minute, the 5-minute, and the 30-minute time frame, and just go and look at the 9:15 to 9:30 candle right here. 9:15 to 9:30, it's bullish. You already know the trend is in an uptrend from the previous day. You could have taken a buy right here or a buy after this bullish shooting star candle rejected the 20 and 66 EMA. Just go through your chart and look at the S&P 500, NAS100, US30. Get familiar with how these pairs actually move, and then you can kind of decide after testing maybe NAS100 for a month, US30 for a month, S&P 500 for a month, which indice are you seeing the most success with, and run with that one. That's what I did, guys. Now, without further ado, see you on the next video. Peace out, guys. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.